Hello, everyone, and welcome to our panel of Empowering Women and Farmers and Client-Centric Financial Innovations for these underserved segments. I'm Sahana Arun Kumar, partner and managing director of Amarante Consulting, and I'm very eager to kick off this panel discussion with my esteemed panelists today. Agnes Salianti, Senior Regional Lead Researcher at Southeast Asia for Women's World Banking, Shilpa Rao, Head Partnerships and the Gender and Finance and the Swarnari Program at the Reserve Bank of India's Innovation Hub, and Antonia Bassen, Regional Manager of Francophone Africa at Amarante Consulting. When we put together this panel, a question came up: why do we mix women and farmers in one section? Well, they're both very undeserved population sets, but they're also very important parts of our societies and also our global economies. Just touching on that, globally, the number of males have always exceeded the number of females, right? In 2021, the global sex ratio at birth was 106 males births to 100 female births. But by 2050, a report by the United Nations suggests that the worldwide sex ratio is expected to even out, and it will even be the women who are a bit more outnumbering the males in the decades after 2050. And as we all know, agriculture is one of the world's largest industry. It employs more than 1 billion people, generates over $1.3 trillion worth of food annually, and pasture and cropland occupy around 50% of the Earth's habitable land and provide habitat food for multiple species, right? So we're really looking at two very key population sets world over. And since the launch of this 10th anniversary Financial Inclusion Week, we've heard about the phenomenal progress we've made as an industry, as financial inclusion enablers and practitioners, about how big the challenge was and how far we've come. But as we face crisis of pandemic and climate change, we find ourselves in a bigger challenge to how do we include more of these population sets who have not been included so far and with the traction of the last 10 years. So I'd like to hand this topic over to my peers and panelists, with Agnes coming in all the way from Indonesia. You have some very interesting insights to share with us from your research work and working with domestic workers in Indonesia and digital financial services. I welcome you to take the floor. Thanks very much, Agnes.
Thank you, Sahana. I hope my voice clear and sound. So before I begin, I want to thank Amarante for inviting me to participate in this interesting discussion. Because as a former banker myself, I agree that it is essential in today's rapidly evolving financial landscape to really recognize why consumer centricity and creating solutions that resonates with daily realities of underserved communities, especially women, is not just a strategy, it's a necessity and a missed opportunity. So my name is Agnes Salianti. I'm the research lead for Southeast Asia at Women's World Banking. We work to provide access to financial services to low-income women with particular focus in serving women. And today, as Shahana has mentioned, I'd like to share some of the key insights from our latest outcome study, measuring the impact of digital financial capability training intervention for the domestic workers in Indonesia. So the issue of informal sector female workers being left behind from the financial system is a major challenge in creating more inclusive financial access, including in Indonesia. Domestic workers, which actually counted as informal workers, often face multiple barriers. They exposed to low and unstable incomes, limited financial literacy, and also lack of access to the technology required to use formal financial services. In Indonesia, there are approximately 5 million domestic workers who are either completely excluded or underserved by formal financial systems. And as many as 63% of them are women. So coming from research angle, I want to share some highlights that when we intend to design for women, we should be started keeping our perspective or keeping our mind that the woman should be the focus of the design. I want to share from our use case in these training solutions, right? These women domestic workers, most of them are migrant workers coming from peri-urban and rural urbans, for them to work in urban areas where demand of their services might be higher. They typically send remittances on monthly or quarterly basis. The amount can vary significantly depending on their income levels and also their family needs. So understanding the behavior of migrant workers and their remittances is actually crucial for us in designing financial products that meet their needs, ensuring both the workers and also the family can improve their financial security. So at the time when the team did customer research, we further validated that domestic workers often rely on sending remittances to support their families. They also try to manage their personal expenses and contributing to their family's financial well-being. But with their long working hours, they have limited opportunities to visit banks or other financial institutions, making digital financial solutions more convenient and effective ways for them to manage their finance. Hence, the significant increase in smartphone penetrations and also growing adoptions of digital e-wallet in peri-urban areas eventually present a strong opportunity for us to expand our efforts at that time, which then makes a collaborations with Dana, one of the largest e-wallet provider in Indonesia, becomes particularly strategic for us. So at the time, we managed to identify that women domestic workers face several pain points when using digital financial tools. Many of them struggling with low digital skills and need help from others to navigate the app. They also worry about security, fearing that they might lose their money and were more hesitant to keep large balances in their e-wallet account. And then despite Dana's convenience, some still prefer traditional remittance method because they are more familiar to it. And then during the process of when we start doing the piloting, initially we set up the training solutions in a large training format, and it turned out to be overwhelming for some, especially those with limited experience, and also many fear making mistakes while using the apps, which impacts their confidence in managing transactions independently. So the questions further would be how the intervention works then. Can you go to the next slides, please? Yeah. So along the process, the team made several iterations of idea, adjusting the design of interventions, and came up with several points to be considered as our success enablers at that time. Being a domestic workers, they are more likely to trust digital financial tools when they are introduced by organizations they already trust and know. In our case, there is a nationwide organizations that advocates for domestic workers, which then it makes further validate our decisions at that time to make them become our partner in delivering the training. So for us, the key success at that time is partner selections becomes a part of key success in making intervention run smoothly. And then we then try to address about the pain points we identified earlier by providing a much smaller size of training sessions, by using a peer-supported training format, and that allows domestic workers to learn at their own pace. It also includes guiding new users step-by-step materials to reduce any fear of making mistakes, and then to encourage regular use. We also offered incentives such as rewards for completing transactions. So let me share you a bit about how the incentive works. For those who join our peer training in-person sessions at that time, we regularly provide the transport-related incentives for them to come and join the sessions, right? And then at that time, instead of giving a direct cash, we decided to deposit this amount of money into the Dana accounts, which then they could use to top up or send money. And we found out that this effectively incentivized them to explore further the app features and then make further transactions. And that's more important, is that this incentivized format helped domestic workers really experience the benefit of digital financial tools and easing their transactions from traditional method to digital ones over the time. So beyond just remittance, the training emphasized how this woman can leverage the e-wallet features for budgeting, savings, and also managing their daily expenses, which definitely that would be the skills that improve their overall financial management. Further, in women's world banking, we then try to do outcome study to measure what would be the impact so far post the intervention. And then we measured 5 key aspects at that time. The first one is about the awareness and adoptions. We found that after completing the training, 85% of the new users had increased awareness of Dana features. And then in terms of women's self-confidence and financial literacy, by the end of the study, 80% of the participants were confident in using the app independently. This is a significant increase from 54% reported in the baseline. And then regarding time and cost saving, 84% of participants highlighted the time saved by using the app for bill payments and remittances. And then among the new users, 81% reported time savings. And regarding the remittances itself, we proved that the e-wallet transactions to be proved to be a preferred platform for sending their money. So drawn by features like low fee and also other incentives. And interestingly, those who receive their salary and put their money to this e-wallet account were 7% more likely to send remittances via the platform. So when we're talking about is it worth all the way to do all of this, I would definitely yes, because the multiplier effect of empowering women from financial perspective lies at the perspective that women who are financially empowered tend to invest more in their family's health, their family's educations and well-being, which then creating a more multiplier effect that strengthen both communities and the communities. I would highlight about missed opportunity. Women's or banking interventions happens globally. It's not only in Indonesia. Indonesia is only one among many that we have worked around the globe. But one thing for sure, women are being 50% of the world populations. But women are still lag behind men in usage of financial products and services. So what if women were better served and included? Would it be providing more benefit for all aspects, for the women itself, for the financial service providers, and the whole economy? So I'll stop there. Happy to answer any questions. In the meantime, over to you, Antonia.
Thank you so much, Agnes. And yes, we welcome questions from the audience. You can type your questions right there in that chat box or the questions box, and we will come to them at the end of this session. We'll leave some time for that. Thank you very much, Agnes. That was very, very insightful, especially on time constraints, lack of confidence, and how you overcome that by peer intervention and by incentivizing a first usage on the first pain point to then go into other use cases that can help build that habit and that ecosystem of usage, right? I want to go to Antonia now. Antonia has a very interesting example on a very different segment of population, in Senegal and also including women. I'll let her give us a little bit from her experience running this project. Antonia?
Thank you, Sana, and thank you, Agnes, for the nice presentation of this solution. As an inclusion firm, a consultancy firm in inclusion, in financial inclusion and digital and social inclusion. Amarante is regularly mandated to conduct some studies regarding some vulnerable population, including women's. And the one that I will talk about is such of this project, and it took place in the northern Senegal. And Leila, can you go please to the next slide? Yes, thank you. So I think it was in 2021 we conducted this study on need analysis and an ecosystem mapping for the digital solutions in the context of financing the risk related to the unpaid care for rural women in northern Senegal. So we conducted this study with a quantitative and a qualitative study first to understand their needs and the problem they are facing regarding this problematic of the unpaid care. And what we can say and what we notice is that the average age of the women we targeted and we interview is around 49 years old, and they are all married and have an average of 5 children, which is not much in Senegal, but for other countries it is much children. And they are not educated in the sense that most of them cannot read, write, or count, or the one that can do that can do it just on a basic level. They have income generating activities such as trade, agriculture, or maybe livestock farming, but they just have low incomes from these activities. For what we notice is that they can gain just 76 euros per month, which is very low even in Senegal. And they are performing unpaid care around 10 hours a day, which which not give them much time to do the income generating activities. So the risk that we identified several risks regarding this unpaid care they are performing on a daily basis. And the most important of that risk was about the high cost of healthcare they are paying for their kids, for their family in general. And the second part of the study we conducted was about doing a mapping all the digital innovation and solutions existing in Senegal that can address that risks we identified. And in this landscape, we identified one solution provided by a public service and a public organization in Senegal that provide health insurance cover to all the people in Senegal, not only for rural people, for rural areas or people living in rural areas. And for that, they design an offer, a special offer, a target offer for this group of women that were organized. These women all belongs to a social organization, and there were around I think 5,000 women organized in such a cooperatives, and they offer them a special subscription. And what was interesting for them is that these offer just give them some low cost of insurance. And the subscription, they had two type of subscription. You have the group subscription, which was about 1.5 euro. The beneficiary subscription, which was half the amount of the group level subscription. And the most important is the insurance fees that decrease regarding to the group size. From I can give an example. There were this group we work with. There were 3,000 people, 3,000 women. So the insurance fees they had to pay yearly was just around 4 euro a year, and for every beneficiary. This is something very important for them because, as I was saying, they just earn 75 euro a month. And when you have to pay high health cost for your family. Sometimes you have 7 people in the family, 5 children. This can be a higher cost for this household. So this was very interesting for them, and they warmly welcomed this health insurance solution that helped them reduce their healthcare cost on a yearly basis. What I can say also is that women, they are not educated. They just, some of them cannot count or maybe read something, but they all use smartphones, mostly to call people or using WhatsApp, but they also use mobile money solution that exists in Senegal. We have three providers here in Senegal, and this solution we identified and we implement during a pilot. The subscription could be done by the web platform and the mobile application that has been developed. And the beneficiaries can do their subscription and pay the insurance fees via mobile money and through this application. This is so important also in that areas. Next slide, please. Okay, thank you. So this is the result we had after a 3 months pilot that we did in northern Senegal. We had a target of 6,900 people to enroll, and at the end of the pilot, we had enrolled about 43% of that objective, which is very important in that areas that people don't trust sometimes digital solution or someone bringing a solution that they never saw before. So this was very encouraging for us, and they continue to enroll people. And actually, these women still use this cover insurance for their family, and we were very glad to be involved in that in this solution deployment. Thank you, Sana.
Thanks very much, Antonia. And echoing some of the comments here on the chat, it is really a key insight to see that women spend so much time, of a day doing unpaid care work, and that time can actually increase. If there is a health problem or others that they have to manage in household, taking away from their revenue generating capacity and time, but also putting the household at risk financially as well. So very interesting to see these innovative models, and also backing on digital financial services. Interesting to note that even in northern Senegal, we talk about rural and illiterate women for most part actually using mobile money and being comfortable with that. So thank you for that insight. I'd like to move on now to Shilpa, who's going to take us a bit to the agriculture side, and also to what I would like to see an advanced, innovative landscape and ecosystem on which they did some very innovative things. So Shilpa, over to you.
Thanks, Sahana. Thanks to Amarante for giving me this opportunity to come onto this panel, and thanks to Axion and for them for having the Financial Inclusion Week. I think it's a fantastic idea, and we should have more such weeks dedicated to this subject. So my name is Shilpa. I head partnerships at an institution called the Reserve Bank Innovation Hub. I also had, I wear a dual hat. I also had another program called the Swanari program, which is essentially a gender and finance program, which I'll talk a little bit more about, and which is most appropriate for this session today. So what is the Reserve Bank Innovation Hub? I want to say that we're a very unique entity, and we've done some adequate research online to see if there's anyone else like us in any other country, and to our knowledge, there really isn't. So we are a wholly owned subsidiary of the Reserve Bank of India. So we are a part of the central bank, but yet separate, right? And we've been set up with the objective of fostering and evangelizing innovation in the financial services industry. That's literally our day job, to innovate, to think out of the box, to try new things, and to push the industries to sort of think differently from what they do on their day-to-day business. What is our vision statement? It's a very interesting one, which came to our leader and our CEO, very instantaneously over a cup of coffee in the evening. It's very simple, and I think it encapsulates something very powerful in it. Our vision is to enable frictionless finance for 1 billion Indians. I'll just say that again. Our mission is to enable frictionless finance for 1 billion Indians. So, what you may wonder is frictionless finance, right? To us, frictionless finance means anybody, no matter their gender, their income, their geographic location, their economic status in society, should have access to financial services when they want it, where they want it, and how they want it, right? So these three things pretty much encapsulate access to finance and inclusion, right? And our mission is essentially to utilize technology, emerging tech, and the amazing tools we have available to us today to make this happen, right? To ensure that every Indian, no matter where they are, have access to finance when they want it, where they want it, and how they want it. Okay, what's the key to unlocking frictionless finance, right? It's a very, very vast subject, and a lot can be said about it. But one of the things that keep coming up as almost a roadblock for financial inclusion for underbanked segments, be it farmers, be it dairy farmers, be it women, be it MSMEs, be it migrant workers, is the lack of data about them, right? So if a bank were to have data on a gig worker, they would be very happy to lend to them. If a bank were to have data on the economic profile and activities of a dairy farmer, they would be able to lend to them, right? If a bank were to have data about a smallholder farmer who's doing, who has a very, 1.5 acres, and he's growing two crops a year, they would, if they had more data on how much he produces, how much he sells in the APMC every day, etc., right? So yes, unlocking data on these segments, which builds a picture of their economic lives, is a very, very crucial step, right? And one of our flagship projects, which is the first, or one of the first, I would say, unique credit DPIs that are being built, it's called the Unified Lending Interface, is actually trying to do this. We are trying to unlock new data sources which are lying in silos in different places, in a state government, in a particular department, in a milk federation of a local milk society, in satellite companies which are collecting some very, very unique information about farms, etc. So I think consolidating all of that data and making it available is something that we're working very hard on at the RBIH, and the Unified Lending Interface, which was announced by the governor less than a month ago, is a very important step in that direction. You can find more information on our website. Okay, but is that enough? Is data enough, right? So can we assume that if data exists about this woman, about this farmer, about this gig worker, will banks actually use it and provide a loan, right? In our humble experience of doing this for 3 years, the answer is no. It's not that simple. Data is just one aspect, right? Second aspect is that you need to re-engineer the way that you are lending to keep customer at the center of that process, right? So while you may have data, it's really not useful for that farmer if he or she has to come to the bank 3 to 4 times in order to avail a small working capital loan of, say, $1,000, right? Why can't you provide that service in a much more frictionless manner, where he wants it, when he wants it, and how she wants it? It's not frictionless if the bank closes at 4 p.m., but women have day jobs during the day, and they can only do things like this, after they are free, or in those free hours that they have in the night. But well, if your bank branch is not open, if your business correspondent is not visiting you at the time, how do you do that, right? So I think data is one aspect, but re-engineering the way we think about delivering financial services to these segments are equally, if not more important, right? And I think that's where we are trying to lead from the front. Being a Reserve Bank entity, we do have access to banks. That's the platform that we bring to the table. That's the power that we have. So we actively work with banks to not only provide this data to unlock a potential new business opportunity for them, but also help them to think about, why do you have 15 steps in your lending process? Why is it your application form is 17 pages long. What is it that, are you using all of that information, right? Or are you just taking 1 hour of this poor lady, when she can be doing other things which are far more important to her, right? So yeah, we go way beyond, providing just data and support banks in doing that. Next slide, please. So I'll take you through 3 such loan journeys that we have, so to say, re-engineered, right? To say that while unlocking new sources of data. So the first one is the one that it's our flagship project, and now which is live on the unified lending interface. It's called the Digital Kisan Credit Card. Kisan is farmer in Hindi, and the Kisan Credit Card is a very, very popular government scheme in India, which provides working capital loans to smallholder farmers of up to $2,000 to $2,500, right? So the KCC scheme is a very popular scheme in India, one of the most affordable sources of finance for farmers, right? For close to 120 million farmers who fall under this bracket. Now, what we said, okay, data is one aspect here, and the data point here is particularly the land record of the farmer, because the loan is disbursed basis the value of the land or that a farmer owns, right? But still, we saw a lot of issues. We did a lot of research on the field, and we realized it's entirely paper-based. There's a very high turnaround time of up to 2 to 3 weeks. There's a lot of additional costs involved to the farmer to getting this loan, because there are wage losses that he has to bear in order to visit the bank branch multiple times, and multiple bank branch visits, right? So we said, okay, let's take this and figure out how can the farmer get a loan where he wants it, at his doorstep, when he wants it, whenever he wants, and how he wants it, digitally, right? Don't bother him with the burden of asking for too many documents. So we essentially re-engineered a very complicated 9-step process and brought it down to 6 steps. While you say 6 is still a lot, this is the best we can do. And we brought the turnaround time down to 5 minutes from 3 to 4 weeks, right? So this journey is now live with almost all public sector banks. And one of the key things that we did to make it happen, which is the unlocking data part, is to work with about 5-6 different state governments. We're at 5 or 6 now, where it's going to be scaled nationwide, to digitize their land records, right? What happened when we digitized their land records was the banks no longer needed the document or the information from the farmer, etc. Through Aadhaar, through India's existing DPI, you pull the farmer's land records, you use an automated business rule engine in the backend to calculate his or her eligibility, and a loan is sanctioned and disbursed in the matter of 5 minutes. Right, so that's KCC. Next journey, Sahana. We did pretty much the same thing for cattle farmers. So we said, okay, if we can do it for smallholder farmers, why can't we do it for dairy farmers, right? Now, dairy farmers, by the way, are about 60 to 70% women in India. So it's a very, very women-centric profession, right? And they all go to their milk pouring societies, pour milk in the morning, get paid in cash, and and go and leave, right? Now that data of how much milk is poured, how much cash is received, what is the trends that she's pouring milk over the past 6 months is available with the milk pouring society, but it's not digitized. It's not available to banks, right? So to a bank, a dairy farmer is still a blank page, and that he or she is not really doing much. So what we did was we worked with 2-3 of the largest milk federations, Amul included, to help digitize their entire ERP system, and then provided those to banks through one seamless API integration. And again, push the banks one step further to say, reduce your TAT to 5 minutes or 10 minutes or maximum 24 hours, right? So that's what we did again with the cattle farmers. Once again, this journey is live on our unified lending interface and is being used by close to 18 banks. Next slide. And the last one, this is my baby, and the project that we've worked very hard on over the past 1.5 years is the digital self-help group. So I think self-help groups, you all are absolutely no strangers to. It's one of the most powerful, instruments of inclusion and empowerment in the last mile in almost every country in the world. And there are 100 million women belonging to SHGs in India. Again, the process of them accessing credit from banks is broken. Paper-based, multiple bank branch visits, a lot of time taken, to get the loan, 3 to 4 weeks. We've digitized that entire journey, helped create a digital footprint for all SHGs, which is happening for the first time in India. And basis that digital footprint, we've enabled an automated credit decisioning in banks, which allows them to provide a loan instantaneously if they are efficient, but within 24 hours otherwise. So I think these are 3 examples. I'll stop there. I think I've exceeded my time. These are 3 examples of real financial re-engineering, which we at RBIH have spearheaded. And data isn't enough to unlock credit for these segments. You got to do a lot more with the banks in order to do that. Thank you, Sahana.
Thank you so much, Shilpa. Really fascinating to hear you, and also just to think back to a trip that I made in 2013, I think 14, to India when Aadhaar was actually being rolled out. And people called it India Stack for a while. They still do, and now it's DPI. But we see the power of what innovation can happen when there are actually digital rails that are put in place countrywide, right? And you know how to identify a person digitally, and you know how to conclude a contract digitally, and you're able to plug into data digitally. So that makes things so much more seamless and frictionless, like you said. So thank you so much for sharing that with us. I'd like to go back to Antonia, because much as this is a great example, there are a lot of countries who actually don't have this digital rates in place at a national level or even a regional level. And I'd like to go back to Antonia, who will take us through a project that Amarante did, helping digitize an ecosystem for farmers in Benin, and how this exactly what you said about this frictionless ecosystem happening, but more from a value chain perspective, and trying to make it frictionless for the actors involved in the ecosystem. So over to you, Antonia. Thank you.
Thank you, Sana. So as you said, we implement this project in Benin in the pineapple value chain. And the aim of this project, the objective was to digitize the transaction, not only the financial one, but all the transaction between the actors of this specific value chain. Leila, can we go to the next slide? Thank you. So the following actors interact in this value chain. So we have the farmers, and we notice that all these players have the difficulties in the transaction they are having in this ecosystem. The farmers have some issues to access funds through a traditional channel like banks or MFIs, because they don't have guarantees, and they don't have a business record because they are informal, they are not formalized. So they are losing also many times when they have to recover the payment of when they sell their products. So the industrial that are the one that buy mostly the products that the farmers have, they have difficulties to secure the quantities of raw products they are buying for their business and they need for their business. And they want to reduce the number of farmers that are queuing for their payments at the end of campaigns. And the other problem is the one banks and MFIs are facing, is that they cannot develop their portfolio of farmer customers because their product and services are not adapted to the agricultural realities in these specific value chains. So the AgriCalPay, which is the name of the solution we develop and implement in Benin, we try to address some of these problems through the development of a platform, a platform, and also a platform that is reachable via a shortcut called USSD. Leila, can we move to the next slide? Thank you. So how does the AgriCalPay works? So we have all the players that I was describing at the first slide. So we have the banks and the MFIs. They provide treasury, funding, financial services to the transformers, the industrial transformers that are the biggest actors in this ecosystem. They can borrow money to banks because they fit all the conditions to have that funding. So they do it, and the interaction they have with the farmers is that they used to purchase raw products to the farmers. And these farmers can be individual farmers or they can be organized in cooperatives. What they do in the ecosystem is that they also sell their raw products to the industrials. What the AgriCalPay did at this point is we developed some intelligent purchasing contracts using the blockchains. So when an industrial wants to buy raw products to a farmer, he created this contract with the name of the farmer or the cooperative, and also the quantity he's buying, at which price, and the term of the contract. So when the farmer will deliver the products. This contract is created through a web platform of the AgriCalPay and is automatically sent to the farmers for him to accept this contract. When it's done, there is this contract between the two actors. Now, the problem that the farmers can have is someone they don't have the treasury and the cash to finance their campaign, their production campaign. As I was saying it, they cannot access, most of them cannot access funds through banks or MFIs. So what they do, it is something that they do on a daily basis, and we try to digitize it and to formalize it. They request for advance on inputs, and they send this request through the AgriCalPay and this USSD shortcut. They send this request to the industrial that is about to buy the raw products. So when the industrial received its request, it instructs the input supplier to deliver this input to the farmer. But this is also based on a contract between the industrial and the transformer. It's also an intelligent contract based on the blockchain, as the one I described works. So it's the same. So when this contract is signed between the industrial transformer and the input supplier deliver the inputs to the farmer that requested for this advance. And the amount of this advance is paid to the input supplier by the industrial transformer, but this come to reduce the amount the transformer will pay to the farmer at the end of the contract. So, which is important and really interesting at this stage is that when the crop is available and the farmer deliver it to the industrial transformer, the contract is executed automatically via AgriCalPay, and the payment to the farmer is initiated automatically thanks to the blockchain. So the money is the industrial farmer has a deposit on the AgriCalPay, and when the payment is done, it comes from this deposit and goes to the farmer's wallet in the AgriCalPay solution. And when the farmer wants to take this money to do something or to purchase something, he can destroy the electronic money that is circulated, that is in the AgriCalPay, and destroy this electronic money to via a mobile money operator or provider that is implemented in Benin, or maybe via a bank account if he has a bank account. So this is quite interesting and allow us to find solution to some of the problems that we see at the beginning of my presentation. And this solution is quite appreciated by all the actors, even when we have sometimes people that are not very enthusiastic to adopt it, because in these rural areas, when you came and want to implement something new regarding to digital services or something like that, they don't know that. So we made many, and we are making many training on financial education and trainings to allow them to understand well what are how they can benefit about using AgriCalPay on a daily basis on their work, because it provides them records of their business and maybe give them solution or a better access to loans and funding from the banks and the MFIs. What I can say also about this agriculture-based solution, it has been awarded by the FAO. Sana, maybe you can help me on the
Food and
traduction.
Agriculture, yeah. Food and
Yes,
Agriculture Organization.
exactly. It was last year in 2023, and it was awarded as the best innovation in agriculture in Africa. So this is a project that we love so much, and I've been involved for 2 years now on this project, and quite interesting. And we have many, how can I say it, opportunities to scale it up in Benin or maybe in some other countries, because it is really needed by the people in these value chains.
Thank you so much, Antonia. It's fascinating. I mean, it's a very complex flow. I think the trick is that it's really fitting the digital into the daily realities of the different actors in place, and instead of them doing it manually, signing a contract manually, or getting money flows manually, the platform is allowing them to do the same thing quicker and in a secure way, and that is accepted by everybody in that ecosystem. So it's really fascinating what has been achieved. And I also want to say that the beauty of this platform also is that it allows any mobile money player or any bank account to be able to get integrated into it. So it's not a closed loop system where then you have to first convince the farmer or the players to open an account in a particular private sector provider's ecosystem, right, or offering. So yes, fascinating. So Shilpa, much more complex, I think, just from getting buy-in and alignment from different ecosystem players to what you said. But then, for what, comparing with what India has put in place, the foundation must have been very complex to put, and took years to kind of build out before we could add this frictionless layers to it, right? I see we have some questions coming in, and I'd encourage our audience to, ask as many questions as you like. We do have some more time, which is great, and I wanted to, have some time to get your feedback as well, and questions. I see we have a couple. Before I get to that, maybe we can just put out a poll there. I'd be keen to see what comes out of the multiple choice question. So you could just click the polls tab that you see in your live discussion space. And, we as speakers, we don't see how many are in the audience. So it'd be just interesting to see who thinks which player is most important in, actually getting these financial innovations to happen, right? So I'll give you some time to think it through if you need to. Which players are the most responsible to make financial innovations happen? Oh, for the moment, I have 50% regulators and government, 50% private sector. There are no takers for the development sector. I'll give it some more time. Looks like it's really not moving. But that's a very, very interesting. Oh, okay. Now we have 45% regulators and government. There are some takers for the development sector, close to 10%. We'll give it some more time. Maybe if I changed it to who catalyzes, it might have changed the results. But definitely we see the responsibility lies, within those that are actually building the foundations, building the rails, building those regulations and policies that allow things to happen. Oh, we have development sector going to 14% at the moment. So definitely some responsibility is there to kind of push or nudge people in the right directions, but still 50% private sector. And that's very telling. I think we can all agree that private sector has a big role to play in this, and they have to see the economic viability of the innovation, and how does it help them. And yes, regulators need to pave the path as well. Oh, I see the development sector is is sleepily coming along now, close to 20%. Very, very interesting. Thank you so much for taking part in that poll. We have probably a minute left, and I think I'll go to one of the questions. Actually, both questions are directed to you, Shilpa. I think we'll take the first one.
Yeah, take that.
Yeah, Eduardo asks about,
Yeah.
responsibilities. Yeah, over to you.
Yeah. So, thanks, Eduardo. That's a great question. So I think it's an art and a science of mix of responsibilities. But we as RBIH can't really execute any of these projects. It has to be our regulated entities, whether they are banks, non-banking, financial corporations, fintechs. They're the ones who actually execute the project. I think our job is to catalyze, bring everyone together, and we play a major role in the intellectual handholding across. So think of us as trusty consultants to all of the actual entities who will do the work out there. I hope that answers your question. The second one, should I take that one as well, Sahana?
Go
Yeah.
ahead. We have
So I
time.
think the impact of these journeys. So I think it's a little bit early to say, Kashif. We have numbers in India are always huge because we're a country of 1.4 billion people. So in terms of numbers, we're doing very well considering they're pilots. But in terms of actually calculating what is the impact over time, we'll probably evaluate that, maybe a year from now. But the uptake of these journeys among customers is excellent. I mean, we've not had any customers and banks both. And this data like dairy farmers use case, is it available to all banks? Yes. And that's kind of what we have unlocked through our credit DPI, which we are calling the Unified Lending Interface. You can Google it. It's India's first credit DPI. So once we did a pilot and understood that this data is useful, we said, okay, it's time to put it on a platform where everyone in the financial ecosystem can actually use it. So yeah, that's what we have done through our Unified Lending Interface. Thank you.
Thanks, Shilpa. I see a very provocative comment, one that we didn't think about. So Carolyn says customers are highly responsible, right? So remember the poll asked whether government or regulators or development sector or private sector are responsible. And I'd like to put this out to you, Shilpa, Agnes, Antonia. Customers are highly responsible. Any comments on that? Any takers?
I'm always a champion of customers. I think there's enough we have to tolerate. Don't put the burden of this on customers as well. It's time the banks and the industry get their act together. On a lighter note.
Yeah, I think the key is responsibility, right? I think the customer has a big role to play in helping us design for them, right? Because we need to see how they behave, whether things work or not. Is the price point right? Is the model right? Is the timing right? Et cetera, et cetera. But I kind of agree there. I mean, are they really responsible for the innovation that comes out at the end? Yes, but to actually make it happen, I would use a different word. Maybe they're the key inputs to make that innovation happen, right? Not sure, Antonia, Agnes, if you want to add anything there.
I want to echo what you just mentioned, Sahana. Like, customers are not just passive recipients of financial inclusion initiatives, right? They are active drivers of its success. So their involvement pretty much ensure whether the ecosystem remains responsive, relevant, and impactful for them. I think I have no words to say more than that.
Yeah. I mean, it's interesting, right? Like the customer is at the core of how a private sector would, onboard them, how a development sector would look at them and, use their input, and how a regulator needs to think. A lot of them are very risk averse because they're thinking about, the customer as well, right? Maybe a question to you guys or girls. How is the how does it play out between a private sector need for profitability, right? They have to find the economics of it. Otherwise, it just doesn't fly, right? And then you have the development sector and the government thinking really about that public service mandate and really about the social impact. In your work, each of you, how do you find we can keep this, very delicate balance?
Should I go first?
Go ahead.
So, we've learned the hard way that no innovation is going to fly unless it's economically viable. It's as simple as that. I mean, there's one aspect of doing an innovation just to prove that something can be done or something different, to try something different out of the box. But it's never going to move from just being a POC or a pilot or a small idea to a population scale solution unless and until it works for all the actors involved. So I think in even and I speak this as something that I need to keep in mind constantly when we work as well, is when we are designing a new process, when we are designing a new product, when we are designing a new platform, a new DPI, it's not going to work unless the banks see a benefit, unless the regulators sees a benefit, unless the fintech see a benefit, and of course then customers will benefit, right? So to me, they're almost undivorceable, innovation and yeah, I mean, and it's a reality.
Nicely put. Antonia, Agnes, any reactions to that? Any further input on that?
Yeah, I can go next. Women's of banking, like for our work, we tend to balance financial sector profitability with the government and development mandates by aligning business goals with its impact. So when we talking about designing sustainable and inclusive product designs for women, we cannot go directly as it is for the financial service providers, right? They keep asking, where's the money, what's in it for me, right? So the way we partnering with governments to ensure regularity support, public-private collaborations that promote financial inclusions, it actually can help us to create long-term benefits for all. So not only ensuring customer retentions and loyalty for the providers itself, but also showing that empowering women through financial services can lead to both financial returns and positive social outcomes. We also have an active involvement and enrollment in advocating for gender-centric policies to encourage financial institutions to focus on women economic empowerment as a key driver of growth. So yeah, echoing what Silpa wrote, it's not like easy, it's not as easy as flipping out our hands. It needs like full efforts to ensure the balances and how to make this work.
Thank you, Agnes, for that. So, I go back to our poll. Now we do have close to 20% of the audience who thinking that development sector is actually important and responsible as well. And going by what you're saying, we see very well actors like Women's World Banking pushing a bit the needle to say, okay, pushing the private sector to try this or that, or advocating so that we have alignment across the different sectors and different stakeholders. Antonia, would you like to contribute? And I can translate for you if you want to go in French.
Yes. En fait, ce que j'ai à dire, c'est que les trois sont nécessaires et ont leur rôle. Les régulateurs sont là pour s'assurer que les risques sont minimisés, que la protection à la fois des consommateurs et des providers soit respectée. Le secteur public est là pour proposer des choses et faire du bénéfice. D'abord, on sait comment ça marche. Mais le secteur privé, oui, pardon, on sait comment ça marche. Ils sont là essentiellement pour faire du profit. Mais ce qui est important, en fait, c'est que le consommateur, l'utilisateur a son rôle à jouer. Mais parfois, c'est difficile de faire adopter ce type d'innovation financière à des personnes qui ont pendant des années, des décennies fonctionné d'une certaine manière. Donc, c'est là que l'importance du secteur, du development sector est là, en fait. C'est vraiment à ce niveau-là parce qu'ils font le lien entre les trois acteurs de manière à ce que les choses puissent être adoptées, mais surtout mènent quand même des plaidoyers, des sensibilisations pour expliquer que ces innovations-là sont importantes et peuvent apporter des bénéfices qui ne sont pas forcément visibles de prime abord.
Merci beaucoup, Antonia. Very well put to conclude our session, actually. So Antonia says that all the three actors are very, very important. The regulators, the government is there to protect the interests of the people and of the businesses, and to make sure that things are being done fairly, correctly, in a secularized manner. And the private sector is always going to look at profit. We're not going to be able to change that mindset, and that's, their place. And so in between both of them, you have the development sector, whose role is to bring the two together, is to advocate with regulators and government, and is to prove to the private sector, sensitize them that going above and beyond a natural segment or a natural offering, innovating a bit, can actually help them get more benefit, and can actually then help also the social economic impact agenda that governments want. So she really looks at the development sector like the glue that brings the two together to make this work for the people. And I think with that, we've come to the end of our session. Thank you so much for listening, all of you. Thank you for engagement. Thank you so much, Agnes, Shilpa, Antonia. I totally enjoyed listening to all three of you, and looking forward to crossing paths in person soon.